Going on, Wealth Awakening family. As promised, we are going to go into our first class today, and this will be available to all members. So, this will be free members along with the paid tiers. So, what we want to break down today is just some of the basics, the fundamentals of investing. And, that would include, buying, selling, and holding crypto. That would include stock market as well, and then obviously those who will be in the more advanced class for trading. There's just certain things, certain tools that you have to have in place, that you want in place, so that you can make sound decisions. All right. And I'll discuss the first thing I'll just mention briefly. When you're looking at this data, you got to understand that there's a lot of different ways of analyzing the data. Being in the world that we're in and under the current administration, according to, traders. Now, granted, I've only been in this industry since like 2019, which is a long time. But when I speak to those who've been doing this a little longer, what they mentioned to me is that this has been one of the most consolidated toughest markets to kind of predict because of the current administration and the involvement of geopolitics, world wars, artificial intelligence. All of those things factor in, and really the resetting of our financial economic system as we speak, whether that be how we buy assets, digital, real estate, introducing crypto into the banking system, and that being a part of our day-to-day process of buying goods and services, or having the banks hold on to your money. There's a lot of things that are in the system, such as like the Clarity Act that was changed last year, or Liberation Day, which we're going to go into. You're going to see this on the chart. All these different factors are having an effect on the market, both good and bad. But I'm going to show you how you're going to be recession proof. It doesn't matter really what's going on. You're going to have the edge, and you're going to be empowered if you just set up some of these tools that I'm going to show you today, and use these tools to gather data. That way you make sound decisions, and that way you feel confident whether you're coming in or exiting the market. All right. So with that being said, we're going to talk about a few things today before we get into that. The first thing I want to talk about is the mindset. And why are you getting involved in this? Why are you joining this organization? And why it's important to have other seasoned individuals who've been doing this for a while, who may buy, trade, and sell different type of assets. Why it's so impactful to have us all in one place to be able to share information. Okay. So before we go into that, we're going to talk about something that's very important. It's really mindset, but I want you to be honest with yourselves as we go into this breakdown on the 4 different ways of making money. This information on this page I'm going to show you changed my life personally well over 20 years ago. It changed my whole mindset, because depending on where you grew up or how you grew up, who your mentors were, what were your opportunities, the world can be very small. And I initially grew up in a very small town, but even in that small town, I was exposed to this very important life-changing information. This changed the trajectory and perspective of how I look at money. And that started well over 20 years ago. And here we are today. And I hope this has an impact on you as it did on me. All right. So with that being said, let's take a look here. We're going to look at this breakdown. It's called the Cashflow Quadrant. The Cashflow Quadrant. And what does this entail? Cashflow Quadrant. What this is, it's a famous author, entrepreneur, a big real estate guy as well. His name is Robert Kiyosaki. In the early 2000s, he came out with 2 books that were bestsellers. One was called Rich Dad, Poor Dad, and the other one was called Cashflow Quadrant. Okay. Now, this Cashflow Quadrant, what he is going to break down, he says there's only 4 ways of producing income. He said there's linear income, which means you trade time for money. There's leverage income, and there's residual income. I'm going to cover all 4. All right. What makes this so powerful is that when I got into entrepreneurship at the age of 18, I believe, 18, 19 years old, I only knew of one type of income, and that was trading time for money and being an employee. The whole system is set you up to, follow the rules and live in a box. All right. Trade time for money, work for our corporation, go to school, get good grades, get the good grades, right? Pay for the post education, which is thousands of dollars, hundreds of thousands of dollars. And once you get that piece of paper, you've made it. That's how they sold it to our generation for the last 50 years, especially by, pushing education. So again, I'm not a financial advisor. I'm not against education. Exactly why you're here now. I knew there was more on the other side of this information. So I'm going to break this down. I'm going to get to these points. The first thing I want to talk about is employees. Those are E's. Everyone in society is set up as an E. Everyone starts there, right? You go trade time for money. You sign a contract to say, hey, I'm worth XYZ dollars per hour. $10 an hour, $15 an hour, $20 an hour, $30, $60 an hour, right? And you have a job, right? You trade your time for that job. You do your 40 hours a week, maybe 40 to 50 for some of us in management and so forth, right? And you go home and they give you a paycheck. Usually most people get paid every 2 weeks. Okay. But that sounds familiar, right? Okay. So these are E's. These are employees. All right. On the bottom left-hand corner, we have self-employed. Okay. Self-employed people, they basically own their job. So what I mean by that, examples. Lawyers, for example, they have, went to school, got qualified to represent people. But if you're going to have a consultation with a lawyer, they can have, a consultation price, right? If I'm on the phone with you, that's $400 an hour, for you to get counsel from me, right? Lawyers, it could be people in the beauty industry, right? It could be barbers. It could be people, nail techs, hairdressers, right? They're still trading their time for money. It's just they get to choose their paycheck price based off of what they feel they're worth for that hour. The thing is, they're still limited to how many hours are in a day, right? How many haircuts can you do in a day? How many sets of nails can you do? Pedicures, manicures, and so forth. Does that make sense? Okay. So they're self-employed. These people, this is the most successful person I've seen at that time. My hometown was a guy who was a barber, and I watched him elevate by cutting out his basement to, having different locations in the little town that I grew up in. Okay. But this was powerful. These people made six figures or more in most cases. Right. But here's the thing though. For example, if you are a barber, let's say, right, you can make a lot of money, but if you want to plan out a vacation and you go on vacation, you have to tell your clients you're not going to be available and your money stops, right? The money doesn't keep flowing because you stop cutting hair, as an example. Okay. So these two, the E and the S's, they're based on linear income. That's changing time for dollars. All right. That is unfortunately, well, it was years ago, up to 95% of the population are either E and the S quadrant. All right. So now let's hop over in the top right corner. This is big business owners. Now, this is how I got in the industry, and this is why they brought this to our attention during the presentation, just like this. A big business owner, or let's say for a network marketing company, or you have a small business in your town or franchise, right? By definition, is 500 plus people contributing to your personal income, your bottom line. Okay. So if you have 500 customers, 500 employees, or, let's say if you're a real estate broker, you might have 500 agents under your organization. Same with a car dealership. If you're able to leverage over 500 plus people, these people contribute to your income, which means you don't have to be there. You just want to hire and vet and qualify people who are just as good or better than you, right? That's by definition of big business. This is where leverage kicks in. Okay. Leverage kicks in here and you're building wealth because you don't have to be there. You're just managing people. That's why you hire managers with degrees to run your corporation or run your franchise. Does that make sense? All right. So that made sense to me. And this was the key in network marketing. They would say, hey, build an organization, get 500 plus customers to contribute to your income, and you get paid residual income. Now, those checks come in month after month, year after year, or in some cases, week after week, where that money is automated. Once you build it, it continues to grow for you. It's very powerful. All right. And then at the end of the presentation, they get into this, and this is where we are now. Woo. I'm going to tell you, when I seen this information 20 years ago, this was in my hindsight. I just wanted to get here. But when you get here, This is you making your own moves, right? So if you want to open your own business and leverage that to bring you in income, it could be anything. It could be a restaurant. It could be a service. There's so many things you could do here, but you would be taking money from this and putting it in this to make more money. Are you tracking? That's good stuff, right? It could be real estate. You might, have rental properties out to give you cash flow here. We're in liquid assets here. This is what we're teaching today. That's why this is so powerful. Years ago, you have to have an agent, you have to have a middleman to help you invest. Now we're making money on our smartphone. You are in total control with this information. This is such good stuff. One thing I like about liquid assets, aka stocks, crypto, and trading, is that you don't have to report to nobody. There's no boss per se. You can do this on your own time, on your own schedule, and make money 7 days a week if you want to. Right? I hope y'all understand that. You can make money from your smartphone or from your laptop 24/7. You can print money. So powerful. All right. We're gonna Oh man, I just lost my thought there. But just hear what I'm saying. Only 5% of the population gets here. Honestly, I believe it's closer to 1%. So I remember years ago they were campaigning. They was like, we hate the 1%. Everybody was pissed off because these people make money hand over fist, no matter what. They usually don't pay taxes because they're funneling it somehow to not pay taxes. But everybody, I want to ask you this question. Between both sides, left or right, which side do you really want to be on? Do you want to be on the left side and stay here? Because most of us are here. Or do you want to be on the right side? And this is a very easy answer. You want to be on the right side. More time, more money, more vacations, more options, right? More options, better lifestyle, healthier lifestyle, whatever you see that is, if that's important to you. More time freedom, right? Less stress. That's what we want. So with that being said, that's what we want to offer you at the Wealth Awakening. The way you're going to get that is through understanding charts. All right. Which brings me to this. So I hope this makes sense to you. If you can get the Cashflow Quadrant, go buy that on Amazon, Rich Dad, Poor Dad. Timeless, great information. All right. So I just wanted to break that down for you. You got to know where you're at so you know where you're going. We're building a roadmap for you. Everybody's situation is going to be different. All right. So first tool I want to show you. Boom. Let's pull up these charts because this is what we do here. See, we don't, outside of the geopolitical news, which you'll get a part of this network, we don't get into the guesswork. We get into the nitty gritty. Let's look at the numbers. Men lie, women lie, numbers don't lie. Right? Let's look at these numbers, y'all. Let's look at the numbers. So right now we're looking at a tool called TradingView. I'm going to go to it as if we're starting from scratch so you can just really see here. All right, so let's look at, all right, if you were starting from the beginning, I gave you instructions today in the video to get this tool, right? This is TradingView, okay? They are running a sale to get the subscription, which they do throughout the year, usually New Year's, certain holidays. You can pay for it by the year, you can pay monthly, okay? This is what it looks like on the main page. So go to TradingView. Now, what this platform is just a platform where you can chart anything. You can chart stocks, crypto, ETFs. You can look at anything, but you're using this as a tool. It's not an actual broker. It's just a tool to use so you can mark your charts and make decisions on what you're doing in the market. Does that make sense? This is not a broker. This is just a subscription. Well, there is a free version. You can get this for free, but there's different tiers. I think one plan's $15. The other one's like $35, depending on how many indicators you're going to need. But I digress. You can get this for free. Just make sure you go and register because you will need this tool in order to chart, okay, in class. So it's like having your calculator in school. You got to have one. All right. So that's what the homepage looks like. Now we're going to get right into the nitty gritty. Okay. First thing I'm going to do, I'm going to clear all my indicators here. So you see what this looks like before we mark this up. We're going to talk about candlesticks. Yep, candlesticks. All right. We're going to start here and then we'll add our indicators as we go. So what are we looking at right now? We are looking at Bitcoin, all right? BTC, USDT, right? You'll see here there will be a list of all kind of stocks. You can look at any stock here, okay? And you're going to see I kind of have a hot list on the side, but you can look at stocks. You can look at, funds, mutual funds. These are basically like ETFs. And what an ETF is a bundle of different assets. Okay. I do kind of like this that this is up here coincidentally. This is called IBIT, which is basically a crypto bundle of cryptos, right? The top performing cryptos. Okay. We could take a look at that. In fact, I might just add that on the chart there. All right. Yeah. So that's IBIT, right? So we got IBIT, we got futures, we got Forex. And again, you know, this is amazing information. All of this is here, but we're going to use the checklist. Just know you can look up anything. If you're looking for a certain asset, you can look it up right through here. So let's just say, I got a hot list here, something we're really familiar with, Apple. So we go look at Apple, right? This is Apple's performance. So a few things I want to show you up here. These are time frames that we're looking at the top of this chart here. So as you can see, this is 15 seconds, 30 seconds, 1 minute, 2 minute, 5 minute, 15 minute. Realistically, you're going to probably be looking at stuff from 15 minutes on up if you're looking to day trade, because basically you're trying to get data that is live for that moment, which means the stock market is open. All right. So you're looking at 5 minutes, 15 minutes, 1 hour, 6 hour, 8 hour. And you're going to notice that these candles change a little bit because each candlestick, for example, let's just keep it simple right now. We're going to do the D, and the D is a day chart. All right. So most people start here, right? This is a day chart. So each one of these candlesticks represents one day. All right. So I'm going backwards because this is present day. And that's the thing with the market. We're basically, how can I break this down? Market has patterns. Okay. And the patterns is history. So the way that you make decisions is based off of the history of the asset. So we're going back in time to a degree to see, what level did it hit so that we can predict where it may hit again or where it may be headed. Okay. But my point is each candlestick, in this case, we're looking at a day chart, is one day. So this is what happened in 24 hours worth. Okay. The day before that. Okay. And what you will see, let me move this. This is kind of in the way here. All right. While I'm trying to record each day, like for example, this is it's Thursday today, April the 2nd on a Thursday, right? Market is closed on Sundays, right? So it skips from Friday to Monday. Does that make sense? Because it's the stock market. What you will find out in the crypto market, that's open 24/7, which we'll get into in a minute. It's really exciting stuff. So that market never closes, unlike the stock market. Okay. All right. So what we're doing, we're looking at Apple here and we're just looking at this information. And basically how it works is the red candles means the market is going down and the green candles means the market is going up. Does that make sense so far? Green days is up, red days are down. Okay. Kind of getting a little freeze on my screen here. I'm dealing with some technicalities, but we're going to keep going. All right. So yes, this is what we're looking at here. Up days, down days. All right, now let's look at another asset. This is Amazon. And you notice these gaps in between it. These are basically the days the markets were closed. That's why you see gaps in these because these are stocks. Again, okay. Now, if you look at something like BTC, which is crypto, you're going to see as I zoom out here, this information is 24/7. There are no gaps because it's an asset that performs all the time. Okay. All right. So let's take a look here. This here located on the right is the pricing. So if I just look here, I can look at Bitcoin hit an all-time high about 126,318, right? Okay. And then recently, we're at about 60K. Okay. So, are y'all still with me? So I can zoom out. I can manipulate this. I can, there's a lot I can do. I can zoom in. Hey, I'm trying to get a closer look, you know. All right. This is a basic chart, and this is what people read. Okay. So I'm going to go back in time. I think we're going to go back. Let's look at the last time where crypto really started taking off. Okay. Or I'm saying Bitcoin, excuse me. So I'm going back in time. We're going to go back to about 2023. So, and you'll see later when I pull up this data, that is October 17, 2023. Look at how high this asset ran up over time. Okay, it's 2026 now. Are y'all seeing this? All right. So what I'm going to do here, I'm going to get this measuring tool here. I'm going to start, pretty close to the bottom here, and then I'm going to measure this. This is just going to measure days. So from here to, let's say, like the all-time high of this asset. One moment here. The all-time high of this asset, that is approximately 723 days. Okay, and remember, each one of these candlesticks is 1 day. So that's 723 days. All right, y'all tracking since 2023 up into it looks like September or October of 2025. Right? Look at that run up. So I'm gonna show you this just as an example. That's the amount of days. Now let's just say that you came in here and you heard about this Bitcoin thing and you just started buying a little every couple of weeks at your job. We're basically marking how high this asset went up to. So that's about right. We'll get about 126,000. So what we're looking at here is a 378% gain on your money if you were buying at the bottom here. 378%. So just to put that in perspective, some people would say, oh, it's a 3x or almost a 4x. And what that means is it's 4 times or whatever you were invested over that period of time. But 378% in less than 3 years is pretty amazing to me. I would say so. And remember, you started buying this at $26,000. An example, it ran all the way up to $126,000 per share. You bought at $26,000, and you just put your little money in here, there, everywhere. If you're wondering, this is how people build their portfolios at their job. That's what a 401k is. For every 2 weeks, you are automatically having money put into this system. If this was the S&P 500, which we'll measure that next. Okay? And that's the gains on crypto, 378% in the run up from the bottom to the top. That's what I just measured there. All right, pretty amazing stuff, right? Stick with me. Stick with me. This is called charting. Remember, you're not missing this money. When you're at your job, you're not missing this money. You're going to invest regardless. You never saw this money. It's coming right out your check. We're going to look at something, an asset here that's very common. It's called the SPY. And all it is the S&P 500. And this, most 401ks, this is what people are holding. Okay. And we're just going to take a look at that before we start putting up indicators and things. So let's look at this. We're going to zoom in here. We're going to get right at the bottom. I'm trying to find the bottom of this thing as close as possible. All right. So we're going to look at right here. We're in 2022. All right. So again, if you started your job, your career at your new job, and let's say you started right here and you just started putting some money away every 2 weeks. Okay. Hold on. We're going to keep zooming out here. All right. Keep measuring here. Uh-oh. Sorry, guys. The tool is moving on me. Keep stretching this out. Almost about 900 days. We're going to keep going. to all-time high territory. Let's see. This is the S&P 500. We'll just stop there. You get the idea, right? This is about the bottom. We're measuring from there to here. That's about 1,000 days. This is 1,066 days. Okay. Now again, this is going back to 2023, and we're stopping around February 2026 here. Okay. Now watch this. Keep measuring. So I'm going to pull this to the side, make that a little easier for me. All right. So we're going to pull up here and boom, we're going to stop at that spot. If we measure that, that is 84%, 84.79% to be exact, is how much you would be gaining. So not quite doubling your money. You're very close at 84% gains, 84.79%. Again, coming right out your paycheck and just running up. Right. And the reason why the S&P or the SPY is a good investment, because it's the test on the stock exchange, and they will pick the best performing companies. So you can say with an investment like that automatically comes out, it's a good investment over time. Right. So these things are, in most cases, usually just going to trend up. They're going to go up and up and up. Even as we go back in time, you notice this thing is just trending up, down, up, down. But overall, this performance is up. Are y'all tracking? All right. Let's look at another asset. I work for this corporation, so, let's have some fun with it. Costco. All right. So Costco currently, as of today, it's about $995 on the high. Let's zoom in here just to prove that. This is today's performance. It opened today at $1,008. That's what you're looking at, where you see that O over there, and then at the top it is 1,016, and at the low is $999. So about $1,000 today. Okay, but look at the consistency of this company. Look what they've done. Look at the gains. It's just up, up, and up. Are y'all seeing this here? Good stuff. So look at that. Look at all this gain. That's what happens when you run a good company. You can get all these gains here. I'm back in 2023. Look at this is COVID time, y'all. Like look at this. This is Costco we're looking at right now. You're wondering, right? Pandemic time, just gains after gains. Look at this, $500 a share, $600, and it just keeps going up. It just keeps going up. Those are companies you want to invest in. That's my point. That's Costco. Now again, just put this disclaimer out there. I am not a financial advisor. I am an educator, and this is for entertainment and educational purposes only. All right. But, this is March 2017. I mean, y'all with me, right? I hope this is good. I hope you're enjoying this today. This is the price. So everything I'm looking at with this little plus sign, that's the price of the asset. You wonder why the high retention at Costco for the employees is so high. I mean, most people, been there 10 years. They've been buying when it was $175 a share. Are y'all tracking this? And now it's over $1,000 today. Wow. Right place, right time. All right. So moving on. Now we're going to take a deeper dive. Now y'all got a better idea. We've covered the SPY, we've covered Costco. We're going to, and we took a look at Bitcoin. Okay. So those are the three companies. So, I have a hot list of companies over here. Some are stocks, some is crypto. All right. Let's look at a new one. Like one of the big performing companies over the last 5 years. We're going to look at NVIDIA. All right. Here's NVIDIA. This is another stock here. So I was measuring this earlier. So let me see. Let me clear my chart here. Okay. I'm going to take a look at NVIDIA. See what it's been doing over the last few years. Okay. We'll zoom out. When in doubt, zoom out. All right. So we're going to look here. Look at the run up in NVIDIA. This is during COVID. So if you're wondering what NVIDIA is, NVIDIA are basically computer chips that they put in all of our smart devices. All right, so they're a computer chip company. They help things be high speed so that we can work efficiently. Now putting out AI videos or probably using this technology I'm recording on. So we're using NVIDIA for everything, and that explains the run up. So it's one of the hottest tech companies out right now because of the usage. Okay, so look at here. We're just looking at NVIDIA. I'm looking at the bottom here. Look at this is September 2022, and we start seeing this run up. So we're going to start down here somewhere at the bottom. We're gonna go over here at 208. Now, just to put this in perspective, this thing was $11, $12. Are y'all seeing this? This is the power of knowing how to chart, which we're gonna get into. This thing, look at this, $5 at one point. We wow. Let's just say $9. We'll start here. Okay. So if I go ahead and use my measuring tool, okay, we're gonna start out here about when it was about let's just say $13. That's a good number, right? We're just gonna stretch this thing out. All right, we're gonna keep going. I'm gonna stop right there. I'm gonna stop right there. You see that wick right there on that red candle? Y'all see that? Okay, that is 1,000% gain on that asset if you were buying just a few years ago. This is during COVID time, y'all. This is what I'm measuring. Okay, let's see how much time was that. We were looking at how many days that was. That was approximately 539 days. Wow, 543 days. That's what we're looking at before people start taking profits. Okay, that's a lot of money. If you were buying on your smartphone using, technically, you could use Robinhood. You could have been buying Robinhood here, just buying some shares at $12, $13 here, and you would just be dollar cost averaging your way up every 2 weeks, just buying a few more shares. Look at that potential, 1,000%. That is what we call a 10x. So if you had $1,000 invested here, you would have run. That's 10 times the amount. Is that making sense? All right. That's what we're teaching here in the Wealth Awakening. Okay. And this is on a simple level. Now watch this. I know you're saying that, all right, Ty, this is cool. But how do I know when to buy and when to sell and all this good stuff? Now watch this. This is where the magic happens. You ready for the magic? All right, here we go. Uh-oh. Oh, a lot of noise. You can see why. All right. Okay. What is all this? All right. Let's take a look here. So these are what we call indicators. Okay. And these indicators are confirmations. Okay. We're going to look at this daily chart again. We're going to stay on NVIDIA. I mean, because why not? Right. What we're looking at here is data. I know you're saying, like, what is all these lines? Oh, this is crazy. I'm going to break this down from section to section. Okay. But we're going to stay on NVIDIA. Right. So the first thing I'm going to show you, this is everything zoomed in. We're gonna zoom in a little more right here. So we're going to look at this. I'm going to stretch this out a little bit and really break this down. Okay. So what are we looking at right here? So the first thing I want to show you, these little colored lines, these are called ribbons. This is called a ribbon strategy. Okay. That I've created. And it is phenomenal because it's going to tell you when to get in and when to get out of the markets. Now, you see all this tied up, mumbo jumbo, like crazy wires in your house. You see how this is going on here? We call this in trading, this is called consolidation. Consolidation is when the market is trying to figure out which direction it's going to go in. And then eventually there's a breakout after consolidation. Okay? And what you will see here, and you'll notice, like let's say example here, you'll see after all this twisting and turning, you'll see everything start changing here. The yellow, these are called EMA ribbons. So the yellow are the lower time frames. And then as you expand into the darker reds and blues, that's longer periods of time. You notice when the yellow is here, the candlesticks are above it. Okay? And the way you know how to get in and out of a trade, notice the yellow here, everything is above that yellow. But we're going to wait, watch. And then see, the more these spread out, that means the stronger the trend. Because it just broke out in the trend here, NVIDIA, which I just moved. I just charged you over those last 5 years. You seen it just started trending up. It was going up and up and up. COVID, AI, all of it. This is good. Traders want to get in here. One of the great sayings of traders is the trend is your friend. And you can see here, this is a lot of gains. You could just keep buying and making money and making money. We want to see this type of activity on a trend, on an uptrend. Are you tracking? Right? But you see a lot of green, you see a little bit of red, and then it goes back up. Now watch this. See, everything's still staying up. Some of these spaces here, they're touching these ribbons, right? Kind of testing that area, right? And then right about here, it gets tight, and we see this. And then we see something else. It gets real tight, and this yellow starts crossing in this blue, which is a sign that, hey, people are selling off the asset. So let me make things very clear before we go any deeper. When the market goes down, I'm going to keep it in simple terms. It just simply means that people are taking profit. That's it. That means you're making a withdrawal from your assets. Hey, I need some of that money. I'm going on vacation, college tuition. It's the weekend. Whatever it may be, that's all the red candles indicate. It's just taking some profits. That's all. That's all this is. It means a lot of people took profit on that day. It's around, it's a year after election. But watch this. And you see how tight this is? And eventually there's a pullback, right? Now, what I want to show you here is this, key levels. This is called a stochastic. Notice how they match the indicators. The white is the leading, the purple is the one that trails. I'm just going to show you a few things here. When the white crosses downward motion, that means sellers are in control. And once it hits the bottom of the zone here, and the white crosses over, the buyers are in control. See how this keeps matching throughout this illustration here? White goes down, so does the market. White goes up, crosses the purple, market goes up. Are you seeing this? How it's matching? Up, down, up, down. See this? This is a key indicator. This is called a stochastic oscillator. This is another ways of getting confirmation. All right. So while I'm in here, another part of this indicator is great are these overbought and oversold zones. So what is an overbought zone? It basically means when the price of an asset, too many people are buying the asset, right? And it's going to fall into this red territory. Okay. That means it is being overbought. So I have the settings here in this class. You notice when it starts hovering on that line, it rejects and starts going the other direction. That's on purpose, y'all. That's called technical analysis. Notice here on the bottom, this is oversold zone. Oversold means not enough people are buying the asset. And people start putting in buy orders here on the bottom. So they're buying at a discount, which is what a smart investor would do. You would buy here, right? You want to buy on a discount. You would buy here. You don't buy here because the asset is about to go back down. You wouldn't buy here. All the gains happen here to here. You don't buy here at the top. You buy at the bottom. The name of the game is buy low, sell high. Are y'all tracking? These are all things you're going to get in this education, right? Look at this. Look how consistent this is. You buy here, and then you get the gains, okay? So let's just measure, just to say, this is a daily, so the gains may not. Let's just say you bought here, and the wick is here. That's about, for the day, or I'm sorry, 3 days to be exact, that's about 8% in 3 days, which is amazing. You made 8% on your total account balance with this asset in a few days. I say that's a good day. Not trading time for money. Are y'all with me? That's how that's how simple this thing is going to be for you. And I know it's a lot right now to take in. But I promise you it's going to get easier. All right? Just stick with us. Stick with us and keep learning and keep earning as you learn. Because we will be, running some plays. Let's just say that. All right. So with that being said, is this making sense so far? If so, replay this video and you will get it. And remember, this is a safe space. Ask questions in the chat, y'all. Ask questions. That's what we're here for. We're here to sharpen one another. All right. So that's just a little move there. I'm just showing you that example. All right. So that's called charting. That's called charting. Now, watch this. Last thing I'm going to leave you with today. How powerful is the crypto market really? Okay. How powerful is the market really? I'm going to do something real quick. I'm kind of improving. I got a very important article that I need to pull up. Give me 1 second. Let me send this to the chat. Market cap. All right, let me see if I got that on here. So what I'm looking up here, I'm looking at market cap. So if you're wondering if crypto is really worth your time, we're going to look at this real fast. And then we're going to wrap this up. Matter of fact, I'll just put the link in the chat so that y'all can look at this website, okay? All right, but moving on, we're going to look at CryptoBubbles. What does this tell you? This tells you how things are performing. Very simple. Green bubbles means things are going well. Red bubbles means that it's down, right? What do you see at the top of this? Bitcoin. If you're ever wondering what's going on with the market, is it Bitcoin a real thing? Is it a scam? Well, let's just look at the market cap. How much money is in Bitcoin right now? $1.34 trillion. So I'm going to say no. I think people are buying this asset, right? It's priced at 66,000 plus a share. The volume is 48.77 billion. That's in the last 24 hours. So there's been that much money in this asset that's been bought within the last 24 hours. 48, almost $49 billion. All right. And it's red. Okay. You see Ethereum here. If Bitcoin would be digital gold, Ethereum's like digital silver. All right. It has the second biggest market cap. Then you'll find projects like Solana, XRP, Dogecoin, Cardano, right? These are some of the more popular ones. And they're ranked too, by the way. So this website is great. It tells you everything. If I wanted to click on this asset, get some information on it, it's very simple to read, right? Gives me some quick data. That's what's going on for the day. That's for the week. That's for the month. And that's for the year. Okay. So again, it's going to highlight the all-time high. All-time high, 124,000. And the low right now in the last year is 64,000, which we're kind of close at. So this is a great time to buy. Remember, buy the fear, sell the greed. You don't want to buy here at $118,000. You want to buy here because when it retests this zone again or hit this $124,000 again, you want to take profit somewhere in here, somewhere around 100K, because you've been buying at 64K. Does that make sense? I hope that makes sense. This also gives you data on other linked websites, which is important on the asset. We're looking at CoinMarketCap. Okay. It's a great website. It's going to pull up data and utility, give you the history on things of that nature. Okay. We're also going to look at CoinGecko. Right. Another great website. It's going to give you data on that specific asset. And it tells you what I've already told you. All-time highs, all-time lows, the lows for the year. So 12 years ago, the all-time low for Bitcoin was $67. And that was 12 years ago, 2013. And it's now over $126,000, right? This talks about the tokenomics, basically all the facts behind this crypto, the technology, who created it, how does Bitcoin work, all this great information, right? And this is why people are buying this asset. Okay, so we're going to leave it there. We're going to wrap it up. I hope this has been useful. This is the first of many. We will see you at the next class.